And welcome back, options traders. Good morning, everyone. Well, one of the traders in our group posted an interesting link of an interview from someone who was talking about taking quicker profits. And that was kind of the idea behind this talk. And I'm not saying there aren't times when you shouldn't take profits earlier than anticipated. Market conditions change, your thesis might change, and yes, in those times, it might make a lot of sense to take those quick profits. But as a general rule, I'm very much against it when people teach traders to take early profits. Because what that's implying is that you should take profits that aren't up to the level of the risk that you're taking. That's really what it means. As soon as you see signs of profits, get them off the table. But what they're missing, the traders who follow this philosophy, is that you are always up against volatility. And that's something that you can't control. But you can control when you take profits. So if you're taking the profits too early, you are absolutely going to lose. So let's find out why. Before we do that, please be sure to click like. It is definitely very much appreciated in helping in promoting the channel. So I've talked about this before. I think this is a nice little example to show why it's not a good idea to take quick profits. But let's put things in terms of odds. This is why gamblers look at odds. Very easy way to figure out fair values. Let's say that we have the numbers 1 through 10. We're going to toss them into a hat, and you're going to place a bet on a certain number. Let's say that you are betting that you're going to draw the number 1. And then we're going to throw these numbers into a hat, shuffle them up. You get to reach in and draw a number. And if it's your number, you win some type of a prize, a dollar amount. Well, the question is, how much should that dollar amount be? And this is where odds come in. So in this case, this would be 9-to-1 odds against you. And it's very easy to figure that out. Notice that we had one way you could win out of 10. So there are 9 numbers working against you for every one number that's working for you. Simple. That's the way that odds work. And so what this is telling you is that you should win $9 per dollar bet, and that would be what we call the fair value. So if you bet $1 and you draw the number 1, you should win 9. If you bet 10, you should win 90, and so on. And what would that look like over time? Well, over time, you're just going to be going sideways. Why? Because it was a fairly valued bet. You're winning 9-to-1. Now, that might sound like it's in your favor, and that's how sometimes traders will look at this. They'll say, I'm winning 9 times the amount that I can lose. How great is that? Well, it might not be all that great if there's a 1 in 10 chance of winning. So take a look at the chart here. This vertical axis is your cumulative gains or losses. Right there is 0. So sure, of course, over time there will be some moments where you are above 0 and you actually have gains. There will be moments when you are below 0. Back up here, we got some more gains. But overall, we're just going sideways. Those are some of the footprints of fair value. Just this overall sideways motion, even though you could have profits in the interim. So notice that in order to even just to go sideways, that you had to let these profits run, at least at some moments, to some very high levels. Instead, if you had clipped these profits down into these levels, much closer to the red line, you would end up on the losing side. And that's because, in this case, the 1 out of 10 chance is a way of saying that there's volatility, there's risk. And that's what we're seeing here. There's lots of volatility in it, but we have to let these profits climb to certain levels if we're going to just expect to break even. But here's the problem when people say to take quick profits. Let's go back to this game where we have 9-to-1 odds against you, and you say, you know what, things are getting really volatile out there. I'm not going to be greedy. I'm going to take only $8 per dollar bet. So if I bet $1, and as we're moving through time, I can collect $8, I'm going to grab it. Again, because people think, hey, you can't go broke taking a profit. As I've mentioned before, worst expression on Wall Street ever. You have to take profits that are in line with the risk that you're taking. So what would this look like? Even though it sounds good on paper, that we're far more likely to see an $8 profit than a $9 profit, what would happen over time? Well, here's the same demonstration in Excel for 1,000 such tries, and look what happens over time. Yes, there are times you might end up with profits, but if you sit there long enough, you will go down in flames. You are going to lose in the long run. Now, where some traders misinterpret this again is they'll say, okay, well, maybe I'm not going to let my profits climb this high, but I'm also not going to let my losses go this far down. So if I just keep everything very close to this zero line, smaller profits and smaller losses, maybe I've got a better chance of being on the high side here into profits. That is simply not understanding volatility. You can't control the volatility. There will be times in the stock market where you're going to see that stock gap way down, such as 15, 20, 25% like we've seen recently. Those count. There's nothing you can do about it. So if all you're doing is collecting nickels in front of steamrollers, it's just a matter of time before you end up over here into the losing territory. So the key takeaway from this video, remember that volatility determines the risk and reward levels. You as a trader can't control when profits appear, but you can control when to take profits. And if you continually take profits below fair value, you'll lose in the long run. And reducing profit levels during high volatility only ensures losses. And so for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a technical analysis course. It's all at optionsatoz.com. Also, please join us on the Options A to Z's Facebook trading group, and you can find a link in the description below.